Hey guys, how goes it? Um, I know I've been out of the loop for a bit in our discussions. I was actually just I'll tell you why I was out of the loop actually. As you guys know, I passed my Series 3 test, but in research and everything else, I had let it lapse, right? You got to use it within 2 years. So, I was just busy studying, well, with everything else I've got going on, right, which you guys know. Um, in addition to everything else I've had going on, uh, you know, more on the professional side, I had to retake my Series 3 test. And they've changed the Series 3 a bit. And so, since I had let it lapse without the registration and taking care of it, right, I had to retake it. So I retook it. And that just required a lot of studying. So, some of what I'm going to say here, there may be some comments that I make that are like, "What? You didn't know that? How did you know that?" And it's like, well, I'll tell you why. Because I've been had my head buried in the way they want questions answered and how to figure out only by looking at premium, whether somebody had a credit spread on and then they wanted to change it, and they did change it into a diagonal calendar, and they call it, there's all the NFA terms for it, which can differ from the terms traders use. And what benefit did they gain? And then they exercised one of the options at XYZ price, and therefore, if they exercise the option, what is now their max risk potential, and how much did they realize given costs and commissions? And don't forget about your break-even point, and do that without the platform does that for all of us, right? It does it for all of us now. It's like, well, if you got some sort of option going on in the 10-year, well, the platform tells you what the risk is, and you just accept that. But you have to figure out the actual prices, and then you have I don't know, what was the one question? You have a client who is a needs copper, so they're obviously short, the actual asset. So they're worried about a rise in prices, and here's the cash price of copper at the moment, and they're okay with that. But what would be an effective direct hedge to lock in that price? And here's all the futures prices and which contract would they use, and then when they lift it, here's what the prices are. And then, so considering where the cash went, did the basis weaken or strengthened? And because of basis or strengthened or lengthened, what was the actual total transaction cost on the copper that you hedged off in the futures? And that's basically what I say all the proceeding to say. That's what I've had my head buried in, just studying, make sure I passed it okay, which I did, right? But I've just had my head so buried in that and getting that done and accomplished and checked off that I haven't really been had my nose. I mean, I do have the nose in the markets, right? I manage that quant portfolio, and so in managing it, right, I have to, I absolutely have to be connected to the markets every day and watch what's going on. However, it's very that portfolio is very much based on 50 years of historical movements, and what's the worst punch in the face. You call it in sample and out of sample problems, and so you don't make it money when getting the worst punch in the face, but you can survive it. And then what does that base theory do the rest of the time? And then taking that from in sample and out of sample and all of that. So it has more to do with the way markets typically behave. I don't say charts and I don't say chart patterns because I don't believe in those. But the way rotations, I'll put it this way, the way rotations behave in the market, right? And there is a very demonstrative historical way to view those. It's not technical analysis by any means. It's not looking at technicals, but there's a way to view rotational basis that is historical and you can look at, right? And you know me about non-correlation and all of that stuff. So I say that to say I do have to look at the market every day, but I haven't been as tied in Dan detail as I'd like to be because I've been studying for the test in addition to everything else I've got going on, family, office, all of that, right? So I say the proceeding, the big long Dan disclaimer way of saying some of what I say may be known or out of sorts or anything. But I knew I had to get over here because I knew I've been absent for a while, and I thought I'd give you my guys' thoughts. I was just looking at how this whole thread started, right? The whole thread started February 23rd, 2021, when me and partners are already saying, yeah, we got a really bad inflation problem, brewing up. And, oh man, I forget basically, but yeah, it was back then. It was like, no, the guy that's always been laughing at all the inflationistas. Yeah, no, this one's gonna be bad. There's a real inflation problem brewing, and what was the date of that? February 23rd, 2021, right? There's a really, really big problem, and me, the anti-inflation guy, is saying this could be a really bad one. And you guys know I've pretty much, again, nailed this one correctly, right? So I knew I had to get over here. I know I've been absent because of everything else I've got going on, but I figure I'd give you guys my thoughts. I know you had mentioned the banks. I haven't been as tied in as what's going on as to what, I could be the usual Dan level of detail. I will say this. There's a couple of points I have to make on the banks and what's going on there. As you know, I think there are very, very, very few intelligent people in finance. That I'm sort of a weird hybrid, right? I'm sort of a jack of all trades. I've got my finger in everything. That's unusual. A lot of guys are specialists. There's very few very, very intelligent people. There's a few out there that I really respect. Big D, Druckenmiller. I highly respect his thoughts and opinion. Mohammed Al-Aharian, right? I greatly respect his thoughts. And I sort of give myself a little pat on the back that, like, I've had almost he and I should say, we have just like bang on, like just pretty much nailed this sucker to a T, right? Iceman. There's many, many others that you guys know, sort of the names that I view as intelligent people to listen to. Now, of those intelligent people, do you know how many of those guys? Because I remember all of them saying, I don't think we could have a problem with the banks like we had in 2008. Now, I'm not poking fun. These are people that I respect, but I remember a lot of them saying that. The banks are too well capitalized. This goes back to something else. Listen, me and a partner of mine, right, had this discussion one time, and I didn't really agree with him at the time. His whole approach was any crisis that you look at is really a liquidity crisis, and most of them are based on trust. Has nothing. The mechanics are important as to what's going on, as to where the problem is, but it's actually a liquidity problem. So, and I disagreed with him. Oh no, you look at 2008 and the over leverage, blah 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 blah. Over time I've come to agree with him. I think he's right. Like, it has nothing to do with the capitalization. It has to do with liquidity and trust. And I'm now firmly getting into his camp that any crisis is actually a liquidity crisis, and most of that can be boiled down to trust. Counterparties don't trust each other, right? The whole beautiful scene in Margin Call at the end of the fire sale where they're trying to call people up and people are just hanging up on them, right? The counterparty ain't trust you. You ain't getting a trade done. It's just as simple as that. And I think this is just such a good example of that. You can make the exchanges, you can do this, you can do that, you can make capital requirements, you can do it. But if there's no trust and the trust is blown, then you got a liquidity problem. And as soon as you got a liquidity problem, guess what? You got an actual crisis, a by God crisis. And I think all the way back to tulips, and if they were trading beads way back when, to the long depression in the 19th century, 1905, 1929, 1987, 2008, and whatever we're calling this, right? To quote the same movie. I think all of those, it's just a liquidity crisis based on trust. It's really what it is, especially 2008. You look at something like 2008 and some of the behind-the-scenes stuff of what was actually going on, not in the Michael Lewis book, but what was actually going on that got it way more out of control than it needed to be. It was a crisis of liquidity, a crisis of trust. And I think this is a perfect example of that, which is also why I say that you cannot predict the future. It's a fool's errand. Anybody with any basic understanding of modern science knows that's true. You can come up with a model, like look at very complex models on the climate, right? Tracking a storm. Well, there's 20 different probabilities that you can come up with for that storm that go about 2, maybe 3 days in the future. And after that, it's just like God only knows. Literally, God only knows. Because if your name ain't God, you ain't predicting the future. So you can come up with really, really good models on complex systems, but that's not a prediction. That's a model based on very complex data, the way discrete quanta interacts on a complex system, and too far on the future, complexity just takes over and you can't predict it, right? And I say all the preceding simply to say, isn't it funny how many times we heard, well, you can't have a modern crisis with the banks. It's like, yeah, okay. Heard that one before. You can't have a crisis with the banks anymore. They're diluted and capitalized into irrelevance. Really? Okay, so whatever. And here we are, right? I don't know, because for the aforementioned reasons, I have been busy, studying and stuff like that, and family office, and just all the other stuff I've been busy with, getting it. So I haven't kept up on what really went on with that bank. I have a working theory with no knowledge. How about that? What's that worth? Working theory with no knowledge of what's the day-to-day events, because I haven't been able to drill down to the usual Dan level of detail. My theory is that it had something to do with crypto and crypto's volatility. Here's Dan bashing crypto again. No, I'm not. Like I've long said, right? It's an asset. I'll trade fossilized manure if you give it to me, and if I can believe in, the counterparty risk is clearly covered, such that I'm not going to be the guy on, holding the bag on some weird OTC call, because Magic, the online gathering, is actually just a website. It's not a physical exchange with multiple clearinghouse counterparty to all trades, and the last buyer and the last seller, and matching all of that, and then layering that to the FCMs, and then layering that to, right? It's like, as long as I'm not going to be stuck, and all of those sort of protections are in place for all of the counterparties, heck, man, I'll trade fossilized manure. I don't care. As a matter of fact, not my thing, but somebody else pointed this out to me. I've seen a couple of really interesting quant theses on trading crypto derivatives. Very, very interesting. Not my thing, though, right? So, anyways, I wouldn't be surprised if, since it's a tech bank and crypto has all the problems I've always mentioned, like, here we are, I wouldn't be surprised to find out this little bank full of quote-unquote smart people in tech. So, we got crypto all figured out. And what's that phrase I always hear? You just don't understand it. You just don't understand it. Well, okay. It's my working theory. I have no basis in that. I don't know what actually went on there. And I don't think, a lot of times you'll see news articles that are like, so-and-so is long this, and they're getting hosed. And it's like, you don't know that. It usually takes 9 to 15 months to figure out what actually went on, right? It's like that whole GameStop thing. It's so ridiculous to any actual professional, because they're like, see, we know that XYZ hedge fund has a position in GameStop because it says right here. It says right here. And it's like, yeah, you just figured out how to pull out a filing. And you read it, you saw GameStop, and you think that's their position. It's like, idiot. It usually takes 15 months, 20 months, to actually figure out what was actually going on. You don't know about cross-edging. You don't know about pairs trades to other trades. You don't know about anything, right? Nobody knows anything. So I say the proceeding to say that I don't actually know what the story is. I haven't drilled down to what the day-to-day releases are, what went wrong with that bank. I know that the cries that can't happen to the banks again was obviously false, because all crises are actually crises of liquidity. That's why liquidity trumps everything. Very smart people I respect, by the way. And, you can't predict models. And I would not be surprised to find out 15 months down the road that somehow the volatility of crypto had to be involved in this. Because you guys know my thoughts. It's like mankind. I'm a very avid student, as you all know, of history. And if there's one thing that history teaches us, is that mankind does not learn from history. And so it's like they're relearning all of the idiotic lessons that we've known for the last 500 years about money. And what is money? And it's amazing. I listened to a podcast recently, and I was so frustrated because he's talking gold, 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 right? One of those guys, and it's like, God, people don't realize everything is money. Everything. That's why you need something stable without a lot of volatility if you're going to have a liquid macro, sort of a economy that's liquid and functions well. You need something with very, 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 very low volatility. And because people don't understand that, we get the shocks we get. I'm not saying Bitcoin might not go to 50,000. It very well could. And like I said, I've seen interesting quant theses on trading it. But not black box stuff, just like gray box stuff. But it's like, because you jackasses don't know about money. It's why you keep running into these problems. And I would not be surprised. It's just a working thesis. It's not even a hypothesis at this point. That all of that jackassery going on with that bank had crypto was in there somewhere because of the volatility therein, right? You need something with low volatility. I don't know. We'll see. And yeah, you can't predict the future. Nobody can. And speaking of shocks, we're going to get to the shocks to the system. This is sort of something I've deeply held my nose into for the last 3 years. Fed funds rate. Look at the volatility there. Oh my God. You want to know what a crisis looks like? Well, you're looking at it. Let me just give you a little bit of my Fed funds. I'm not a Charlie D or anything, but Fed funds sort of look into the Fed funds. Usually you get moves with Fed funds like between here and here, here and here, here and here. Now, this is only between, I got this from a guy I know, Nicholas, March 7th and March 17th, 10 days. This is your usual range. On something like a DEES 23, we're going from what, 3.8 to like 5.6, almost 200 basis points. And Fed funds, which is as close to the front of the comet of the curve that you can get in STRS. Oh my God. So yes, I would agree with you. People were seriously wanting to change their shorts. Right? Unbelievable moves. All highlights what I've always said. You cannot predict the future. Can't be done. Right? Because the banks are safe. Remember everybody hearing that? Now, my thoughts on inflation. I think the next two prints, which I've pretty much nailed, are critical. I know I keep saying that, but I say that for different reasons. And this is why the next two prints are very critical. They're going to tell us whether or not the Fed was, in the past, whether they were aggressive or not. Aggressive enough, right? You have guys like me, there's like, and I know Alarian and many others were saying, no, they are not being aggressive enough. You know what? You want to show the market you're serious? Crank it 150 basis points. How about that? By the way, on that topic, does everybody remember from like 2013 to like 2017, 2018 or so, being told by the Fed that 25 basis points was like, oh my God, it was the end of the world, and we can't raise we can't go leave ZIRP just yet. Not just yet. No, we can't do it just yet. No, the economy, we're still got an eye on it. And here they are cranking it, 50, 75, 50, 75, 75, 50, 50, 50. You know what I mean? And it's like, oh, obviously 25 basis points didn't really mean a whole heck of a lot, did it? And it didn't back then. You know me, back then I was screaming that they should be raising it. But anyways, what I mean by that is I'm looking at input costs. You guys know that the whole thing that got me started on this was input costs, fiscal policy, and monetary policy. And that's why I was way ahead of the curve of most people, as were a few other smart guys in finance, which are few and precious and far between, saying between fiscal policy, monetary policy, and input costs, we have got a ridiculously difficult. Do you remember here's a trip down memory lane. Oh, it's just, what was the word they were using? I can't remember. What was the word they were using? Oh, it's just temporary. Oh, the market will shrug this off. And it's like I was saying 2 months before, no, A, it's going to happen, and B, it's going to be really, really bad. As you guys know from the posts I've put up and everything, But here's the problem now. I've been watching input costs because, like I say, you guys know that I watch those very heavily. They've been going down, right? So they've been going down. The next two prints are, you can't base your decision on something like this off of one print. This is something that the Fed does say, Chairman Powell says, and I agree with it. It's stupid to base it off of one print because you have to look at an iteration. You know me and my take on the holy iteration, right? That's everything when it comes to this business. So I'd say the next very brief iteration, next 2 or 3 prints are very critical because they're going to tell us if inflation's gone structural. And I'm not sure if I've specified to you guys my thoughts on that, what I mean by structural. It's something that many of the smart guys have talked about. And that's, you can get inflation that's input driven, right? And in reaction to stuff, what do I mean by that? High oil, right? High commodity prices, right? That eventually the hedge flow of the producers is broken and they have to pass it on to the consumer, right? How do you like all these jackasses out there with their, oh, it's just corporations being greedy? It's always to appeal to the idiots that don't understand how anything works. It's like, no, you can actually measure between producer inflation and consumer inflation, and you can even see sort of a hedge flow of to when they've effectively hedged so they don't have to pass on the inflation to consumers, and then when that gets broken, right? And they have no choice. If they're going to survive, if there's even going to be a business, they have to pass on some of the price, right? So that's one model. But there's also structural inflation, and that's when it gets so embedded into the behavior of individuals and businesses and the way they operate that input costs aren't going to tell you the whole story. So I've been watching input costs and they're going down, and what I'm talking about is if you see inflation still being maintained, then we'll know that the Fed has not gotten aggressive enough because it's gone structural and now it's into the behavior of the economy. And that's what I mean by it's gone structural. Like that's my whole point, that like inflation's gone structural because great, now it's in the behavior of everything. It's in wages, it's in labor costs, it's in consumer behavior, it's in consumer planning for the future. It's just gone structural, and it doesn't have as much to do with input costs now. I mean, a reduction in input costs as soon as humanly possible is great. But you can have inflation that's not as much led by that. And then you got a real problem, right? So I'm keeping my eye on the next 2 inflationary prints for that reason. I don't know, because nobody can predict the future. But that's sort of where I've got my head at the moment, on the whole. You know what I say about prediction. People are like, how are you so accurate all the time? It's like, because I don't predict. I look at what's already happened, right? And that's going to tell you what is already here. So that's where I've sort of got my brain pegged at the moment, is these next 2 inflationary prints in combination of what's going on with input costs and PPI specifically. Because, right, if it remains high, then we got a serious problem. And if we've still got a serious problem, then those hikes weren't enough to squash it, which de facto means the Fed was not aggressive enough, right? But you've got you've always got to consider what the other side's thinking, right? They've been wrong consistently throughout, but there's a lot of people that think, oh, no, it's enough, and it'll take. Maybe they're right. Who knows? You know me. I'm always looking to learn from the complex system of the future. But that's where I've got my head. That's been my thoughts, guys. Hope it all makes sense. Sorry I haven't been around in a while, but with everything else going on, been a bit busy. Hopefully this catches me up. And I'm actually getting caught up. Still not all the way through my taxes, but working on the 150 pages that is my taxes, but getting there. And believe it or not, some of you don't know this, I actually finally went the accountant route. I know I've been saying that for many years, but it's like, all right, this is just way, way, way too much. And so I've dipped my toe in. I haven't gone completely that route, but I've tipped my toe into the accountant water. So getting really caught up. Hopefully I'll be around more. And I'll talk to you guys later. As you always know, my thoughts, not yours.